What's up everybody, Simon here. In this video, we're going to go ahead and talk about buying the dip, whether or not this is a good investment strategy or a finance strategy when the stock market or cryptocurrency, which we will cover, goes down or crashes or dips. And that's when investors typically buy the dips to get, say, a discount on the purchase price if they feel the market's going to go up. Historically, the stock market has always gone up. The S&P 500 has always gone up decade after decade, and cryptocurrency has gone up as well. So Bitcoin, even though it has dipped so many times, or Ethereum, it's still hitting peaks and highs. So we're going to discuss if buying the dip is a good investment strategy. We're going to look and see how people buy the dip, and whether or not I buy the dip or whether or not you should buy the dip, we're going to determine at the end of this video. Before I get into it, I always remind you guys to please subscribe to the channel if you haven't done so already. Hit the like button as well. It helps the YouTube algorithm. Turn on the notification bell, which will alert you for the next video coming up. So let's get into this video. So does buying the dip actually work? We're going to look at some ways it can work and obviously give you some feedback on what investors truly think of buying the dip. We're going to go into what buying the dip really means. So it's a basic investment strategy of when dips occur in stock and cryptocurrency. It's called buying the dip. This doesn't mean you go all in while the asset price goes down. It means that you buy the average after the price goes down, or you buy at an average after the price goes down or settles or it's about to go up. So for example, when Bitcoin is going down and it seems to be settling, that's when you buy that dip knowing that it's going to go back up, and you're holding for historic highs and potentially selling at highs, waiting for the dip again, seeing when it settles, and buy in again. This strategy generally works when the market is going sideways on a chart, not necessarily a complete crash. So in a bull market or stagnant market, people are able to take advantage of buying the dip. And the bear market for dip buying is potentially a hazard because it's going all the way down. So you have to wait until the drop in price is stagnant, or it slows down, or it looks like it's recovering. So when someone buys the dip, they may do one of the following things. They may buy incrementally as the price goes down. So they may not buy right away, but they may buy what they can afford at those times. Maybe $100, $200, $1,000. It just depends on the individual. They are creating an average position, not necessarily the lowest position, knowing that the price will eventually hit a peak. Another way of buying the dip is you wait until the price settles. So for example, Bitcoin falls down to 30,000. It's around 30 to 31,000, but we've seen it trade around 40 to 45,000. So the price looked like it settled at 30,000, and that's when someone would come in and buy that dip. Even as a price shows signs of recovering, that's the time when you start going in and investing. Another way to buy the dip is, let's say you're using the Robinhood app. There is a way to set limits and buy orders and so forth. What you could potentially do is set a limit to buy at a certain price at a certain amount in the app itself. That allows you to invest without even being alert. But let's say, for example, you have Dogecoin and you wanted to buy Dogecoin at 15 cents. Well, recently the price has tumbled really low before it started climbing back up. And if you set those limits on your Robinhood app, you would have been able to buy Dogecoin at 15 cents, which is a dip. And then you would be able to hold it and place a sell order, say at 20 cents, 25 cents, etc., whatever the highs may be. Oftentimes when people buy the dips, they tend to hold on to those as constantly investing in a crypto or stock that they feel is going to continue to climb. People that buy the dips tend to sell the profits right away as you're seeing a peak in prices. So cryptocurrency is really famous for that because the peaks or the gains come up in really high percentages. So if you're buying a dip on a minus 50% day and the next day it's plus 30, then they go ahead and sell that for profit. And if you have enough money to play with, you could potentially make a lot of money in the buy the dip sector. Also, you could hold your purchases when you bought the dip for long-term profits if you feel like the coin is going to continue rising. So there's another version of buying the dip, and that's where individuals would continuously buy the dip. They would hold and they have a sell-off price in their mind. For example, it may be $1 for Dogecoin or $100,000 for a Bitcoin. So they're continuously investing in that crypto or in a specific stock in the stock market and continuously pushing to get to the very high peak that they have set in their mind before they sell. And that's okay as well. Keep in mind, with any cryptocurrency or stocks, people rush in to buy for whatever reason when the prices are very high. So there is a sort of a hype going around the cryptocurrency. It's debated, it's talked about, it's being published, and people feel like they missed out or it could go higher, so they tend to invest. So that strategy does not necessarily work at a good time for you to buy because you're buying on the hype. Usually you want to buy after the hype has settled. That's a dip. When Elon Musk went on Saturday Night Live to promote Dogecoin, the hype led up to the highest Dogecoin price there was, nearly 75 cents. And then after his appearance, it tumbled all the way down to 40 or so cents. So the hype is what you don't want to buy. You want to buy pre-hype or post-hype. Now, there are people out there that study charts and try to buy the dips, predicting the outcomes of it. However, with cryptocurrency in the stock market, especially cryptocurrency, it's really unpredictable because crypto usually doesn't have a quarterly report like the stock market does. It can go up and down and fluctuate. It does depend on whether or not a whale, for example, comes in and invests in a lot of crypto or purchases a large share of crypto out there. It also depends on which coin, how much the burn rate is, and there's so many aspects. However, the stock market versus crypto, you could actually see how the company is doing. If they're having a good quarterly report, then you know it's going to go up. So you could buy that during that time. It's a bargain. If you see, for example, Facebook had a terrible quarterly report, their stock tumbled.
Of all the numbers we mentioned, and they're all sort of lousy, the one that we should mention is operating margins were disaster, in my opinion. This quarter last year, 45.5%, 37.5%. You can say, okay, I get it, but still a lot worse than the street was looking for. The question is, are we in that same type of thing where you have a few months of the stock underperforming?
That would have been a dip you would buy. So you would see what the lowest tumble is when it bottoms out, and then you would invest. So in order to not get caught in buying the dips, you need to first get out of the fear. Keep in mind that, especially with cryptocurrency, it's like gambling. Always check with your financial advisor. However, if you're going to be buying the dips with cryptocurrency, you do need to understand that the crypto could potentially fall even further. You need to understand which crypto you're investing in. If you're buying solid coins such as Bitcoin and Ethereum, it's very likely that your dip buy is going to go up to a certain point or a certain high, and then you would make a decision to sell or continue investing. Now, with Bitcoin and Ethereum, we've seen that every time that a high is reached, or anytime a solid coin or even a meme coin reaches a high, the very next day, there's usually a big dip. So the hype reaches that high, then there's a sell-off from all of these investors, and then you buy the dip and you wait till the new high or even a gain, something that's stable, that's an incline in prices and so forth, and that's when you make the investment. So far, I've been able to do that successfully a few times. However, as an investor, I've been more of a holder in cryptocurrency than a dip buyer. Here's my problem with buying the dip, especially in the stock market. In the stock market, buying the dip doesn't necessarily work because the stock market can have some serious gains year over year, and S&P 500 has had some serious gains as well. In the stock market, historically, you would buy the dip with a 40% decline in stock prices. You would think it's a bargain buy. However, if you continuously or gradually invested $100 a month into the S&P 500 every month, you would probably make more money than holding that cash and waiting for particular dips to happen and then investing more of that money, because your stocks would continuously grow. That investment would turn into a much bigger investment, and you would not miss any type of investment during a specific period of time where you could see a big growth. With cryptocurrency, I feel like buying the dip is a little bit more rewarding because crypto constantly jumps up and down so many times, and you could almost predict the hype. And there has been a lot of people that have made a lot of money on buying the dips in cryptocurrency. If you know the crypto or the coin very well, you're going to be able to predict the next peak, the next fall, the next peak and fall. And usually it happens within a day to a month to a week. Now, looking at cryptocurrency, overall, it's been down the past 3 months and overall down the past 6 months, in fact. And if we look even further, it's even been down, for example, the past year. Bitcoin alone is down about 6 to 7% in 1 year. We had our peaks in May of last year, and now we're trying to catch back up to those peaks. And other coins obviously have done better than Bitcoin, such as Ethereum. It's still up over the year. But overall, buying the dip can potentially make you rich if you study the pie chart and you make those investments during those down moments or dip moments, and then sell them potentially for profit, because again, all of this crypto and anything else that you invest in is not really realized until you get some money back, or when you get that money back. Obviously, that's when you also pay the taxes. So buying the dip as a strategy, I personally don't have enough time to invest in buying the dips because I'm not sitting at a table monitoring the charts continuously, and I think you have to be able to do that if you're going to be a crypto investor and trader full time. I don't have that time, so I pick certain coins, or certain software we should say, because that's what some of these coins are. They're software for transactions, and I invest in those coins that I feel like are going to continuously grow. Some of the coins that I'm currently investing in and looking at are HBAR, Polygon, obviously Dogecoin, Shiba, you got Bitcoin, Ethereum, I think you can't go wrong with Cardano, list of others that I've looked into. Do your research, but make sure if you're going to be buying these dips, you're going to be on top of it, because buying the dip can ultimately lead to you losing money. And if you're going to invest in money and try to play the short game, you got to make sure that you understand that you could lose that money. So you can invest in anything and the next day it could fall. But ultimately, if you believe that all-time highs are going to be reached and you're ready to make that sale at an all-time high, buying the dip can be a good investment strategy in both the stock market and in cryptocurrency. If you have experience in buying dips, comment below. Let me know how it helped you make more money. What are your profits? What do you feel is a good strategy? Comment below and I'll read and reply, as well as I'm sure some of our other channel viewers would want to know how you invest in the dips and then make money, and if you've been successful at it. Personally, I have not done it so much, but maybe I'm missing out, so let me know. If you enjoyed this video, of course, please hit the like button, subscribe to the channel. As always, I appreciate it, and I'll catch you guys here in the next video. Hopefully, everything starts skyrocketing and we make some money. See you next time.